This episode of Market Call is made possible by Robinhood. Try out Robinhood Legend, the all-new free desktop trading platform designed for sophisticated traders like you. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. 30 days has September, April, June, and November. Today's January 30th. And if you didn't hear January in that little rhyme, it means today is the penultimate day of the month, tomorrow the 31st. Dan, Nathan, Guy Adami, 1 o'clock on the East Coast. Market Call. Dan, how are you?
You got a lot of energy for a guy got
Damn
home
straight.
at 1 a.m. because I know that's when I got home. You and I had a great few days down there in Miami at the Global Alts Conference. And we're here, man. We got a good vibe, you know what I mean? Like essentially, or a good sense of the vibes in the markets. There are lots of different markets being represented from, multi-strat, which includes long short equity, and we had macro, and we had private credit, and a whole host of things. So really kind of cool to connect with some very, very smart investors, Guy Adami.
No doubt. I think people would be shocked at the amount of people that were there. I think at one point over 5,000 attendees at this conference. And, it's become, one of the preeminent conferences. And, we're talking our book a little bit here, but It doesn't mean we're wrong in the country in terms of the scope and the breadth and the amount of just assets that are there. So it was great to be down there for a few days. It's great to be back. By the way, we've been chewing on a few things. So I don't know if Amanda can sort of throw this up, but we're discussing internally potentially moving Market Call to 11 a.m. We're not going to do anything without getting some feedback. So we put up a poll. Would you folks be adverse to, would you be okay with an 11 a.m. start? And please, we not only want your feedback, but we value it a great deal. So if you can help us with this, it would sort of go a long way because we're trying to figure a few things out here, Dan.
Yeah, and we're streamlining a lot of our content here. We really want to make a very strong, kind of comparison between the audio first podcasting that we do and then what we do here in Market Call. And it's meant to be very visual and engaging as we are able to do throughout the thing and use the charts and use, systems like the Legend and that sort of thing. So again, we'd love to kind of hear what you guys have to say between 11 a.m. and 1 p.m. All right, guys. So we do a show called Fast Money on CNBC, right? What we do here, 5 o'clock, Monday through Friday. Market Call, we're talking about markets real time, right? We're talking about trade ideas, whether it's in options, equities, ETFs, futures, and the like. That was a bit of a slow money conference that we were just down there. So we got a big high level sort of stuff, but bringing it back to the markets, because at the end of those days down there, Tuesday and Wednesday, we were doing the Fast Money. And we got a lot of earnings. We got a lot of macro with the Fed. And, Amanda put together a slide about stocks that are moving today post earnings. And there's a lot of single stock volatility here. The IBM, that's a name that you've been a buyer of on pullbacks. I've been a lot more skeptical. You see some of those other moves. Again, MasterCard's a really big market cap company. So 5% higher, that's a big move. Tesla, obviously big market cap. And Meta, while those moves seem kind of muted and much less than the implied moves in the options market, I think it's the Microsoft is the one guy that really sticks out to me to the downside. We can drill in on that. Also, ServiceNow. We've been hearing a lot about this kind of next wave of the AI trade should be in some of these SaaS models, but maybe some of these SaaS models, it's a bit more of a headwind in the near term. What do you want to start with?
Yeah, I want to start with Microsoft. I think is the most important one. You're correct to bring up ServiceNow. I want to talk quickly about UPS, but what this is, and the headlines suggest earnings volatility. And if you look at this, my sense, if you added all these names up, you'd come out with a net negative. But what it speaks to is volatility on both ends of the spectrum, and that's something that Porter Collins and Vinny Daniel talked about on Fast Money in June of last year. Make volatility great again. And that's a topic that came up over and over again over the last couple of days. People are expecting the vol. So maybe you're not seeing it necessarily in the VIX, but you're clearly seeing it in some of these individual names. So real quick, let's start with Microsoft chart, because I do think it's important. I've said it dozens and dozens of times. If it's not one of the top 3 most important companies, it's one of the top 5. And this has been, regardless of your view, an underperformer since it made its all-time high back in July. It's been trading sideways, a little lower, a little higher. Here we are below the moving average. I think the reaction to that earnings report, I think it speaks volumes as to the concern around the valuation, because the cloud miss was negligible at best, but it just goes to show you when you're trading at this kind of valuation, you got to continue to knock the cover off the ball.
Yeah, no doubt. Let's pull up a 5-year, Amanda. I'm gonna run the legend in just a
Do
few.
it.
We're gonna be detailing a options trade idea, just to be really clear, in a name that actually saw some downward volatility this week after earnings. So stick around for that in a second. You talk about underperformance. I mean, if you take out that move that we had in the summer, right? Just kind of somewhat of a parabolic move. If you just think about where that came from, I think it was like 390 up to 470, and that was pretty. In market cap terms, you could just here for a $3+ trillion market cap company, a lot of sideways action here. So this is one where you just mentioned the cloud revenue, right? So they break it out. They don't break out Azure as a separate line item, but their intelligent cloud section includes that. The guidance was just And at this point, this valuation and this sort of enthusiasm about this trade, you better be able to beat and raise. So they were not able to do that, right? And if you think about the revenue guidance that they gave for the existing quarter, not particularly robust. This has been going on, Guy, for a couple quarters now. So it's not really that surprising that the stock has been stuck in the mud. And then the last piece of the puzzle is CapEx, right? So if you're seeing slower revenue growth, if you're seeing more competition as it relates to their cloud business, and that's the thing that people are most excited about. If you're not getting the internal productivity gains that you're hoping for by integrating this technology into your own company, right? It should make you think twice a little bit about that CapEx at a time where, and this week, we're going to talk about it tomorrow on the market call a bit deeper after we get the Apple sort of guidance. But when you have this sort of data that we got out of this Deepseek model out of China and then Alibaba, you're going to start to question whether you should be spending less or spending more. And I think the jury's still out on that, Guy.
Exactly right. And again, I think sometimes, people, especially people that watch Fast Money, sometimes I think conflate, my dislike for valuations and things with my dislike for companies. And that's not at all the same thing. These are wonderful companies we're talking about, but in terms of valuation, those things can be concerning. Both can be true, by the way. You can be a great company and you could be expensive. And I think that's sort of the things that, we try to sort of bring forth. We have a question from Toby because, ServiceNow is one of those names. And his question is ServiceNow oversold? And it's fascinating. If you or Amanda can put up a long-term ServiceNow chart, I mean, this has been lower left, upper right for quite some time. I think it just recently got up to 1170 or so. I don't know if we got up to 1200, and obviously you see this significant sell-off. So, the question I think, and I'm not, again, Toby, this is just me. I mean, that's a question. I think the other question was ServiceNow overbought in the first place? So now you have to figure out where you're going to get to some equilibrium. And, I don't think this is necessarily going to be a one-day event. I think it can last a little longer. I don't know where the 150-day is. It probably comes in around 950 or so. If you were to say to me, you know what? I'll risk the $40 downside and get in here. That's fine if you're willing to do that. But to answer the question, is it oversold? Not yet, in my opinion.
Yeah, so it's about 930, Guy, not far from where you're eyeballing it there. And again, I don't really think, if you look at that chart there, that's really technical support, right? And if you're just thinking about the guidance that they just gave, the reaction to it, and we've been talking about this all week on Market Call a little bit. It's just like, yeah, we knew there's been some very euphoric sort of sentiment in and around this secular trade. We knew that folks were looking to broaden it out away from the chips. So we saw what happened in NVIDIA. Then we saw Marvel and Broadcom. So the custom silicon early in the year, we saw some of the NVIDIA competitors like AMD go on a run, but give it all back. The server maker, Supermicro and Dell, give it all back. The memory players like Micron, give it all back. So when you think about the sort of price action that we've seen, when you think about what was the sort of spark that lit the fire here this week in this NVIDIA sell-off, it had to do with a piece of news or a piece of data out of China that no one expected. Whether it's true or not, we won't know until after the fact. We won't know until after we see a bunch of these U.S. companies, the hyperscalers and the like, how they change their CapEx, because people think just because Zuckerberg said 65 billion or Satya said 80 billion, that number does not live in stone. That number will change. If you see revenues start to slow, and that's what's going on in Microsoft, if you see margin pressure, those companies are going to take their foot off the CapEx pedal. The best example of this was in 2020 and 21, it was Meta. So Meta was spending like crazy for the metaverse. Now, they were very fortunate to be able to repurpose a lot of that spend as it like reoriented itself towards generative AI. except for the fact the stock lost 70% of its value from its highs in 21 to its lows in 22. And people have very, very short memories. Now, I get it, Guy. Valuation, you've been talking about this as one name, and you were not a Johnny come lately on this. This is one name that was able to reap the benefits of that spend as early. Microsoft has not been able to, right?
That's right.
Amazon not. So talk to me a little bit about how you're thinking about Meta, because to what the question just was about ServiceNow is the stock oversold? You turned it around and says, was the stock overbought heading into the print?
Right. Well, I think you're right to bring up Facebook. And, one of the things, this is the third quarter, I think, that AI has obviously been a huge driver for margins. And, what you're seeing, I think, with Facebook is, listen, revenues are sort of not declining, but they're seemingly evening out, which is to be expected, by the way. But they're able to sort of offset that. It's interesting. You look at just the earnings, the magnitude of the earnings beat, and you try to figure it out. And it's pretty easy. You just look at the operating margins that they're able to sort of throw out there. And I think a lot of it's on the back of AI. So one of the reasons I've liked Facebook for so long is because of that, and because there's been reasonable in terms of valuation. Of course, the problem is, to answer your question, what do you do today? Now, this is just me talking. I think if you've been fortunate enough to be long this stock, you have to do something after an event like that. So you got to move your feet, whether that's to buy some protective puts, although I can't speak intelligently about volatility here, whether you were to sell a quarter, third, half your position, and then look to reinstate at a lower price. I think it's almost incumbent upon you to do something, unless you say to me, you know what, Guy, this is going to be a $5 trillion company in 5 years. There's no reason to play stock market in the middle of it. Real quick, we have a question about Microsoft. If you can pull up a chart again, longer term. What we're at here is basically, if you can go back to the May low, Amanda, and then draw a trend line up, you will see that we're probably right around support here in Microsoft, is my sense. Now, that's tenuous at best, but that's sort of what I'm looking at here, Dan, and we'll see. So the question is now the time to sort of initiate a position? If you have a view that this is a long-term hold, yeah, you're getting an opportunity at levels we haven't seen for a while, but my instincts suggest there might be some more room on the downside.
Yeah, this could be a great example of a stock that if you felt you missed some of that early investment, some of that early enthusiasm going back to kind of early 23 into 24, as this being one of the leaders in generative AI because of that investment they made into OpenAI, because of their distribution ability with that technology across their products, suites, and services, then that might make some sense. You're never going to get really particularly comfortable about, maybe on a PE to growth sort of level. I mean, maybe you see some sort of margin appreciation once you get through this spend cycle, and then they have a bunch of leverage on that. If you see mass deployment of some of that, tech with their co-pilots and the like here, but I say to myself, okay, what are the negatives? What are the positives? Well, the negatives are that some of the competition that we just heard about this week coming from China, some of these open source models are going to be better than that of OpenAI. Maybe Microsoft weighed a little too heavily into the OpenAI stream. We won't know that in the future, or until the future. But hey, what if they got TikTok? You know what I mean? A sweetheart deal for TikTok. I don't mean sweetheart, but what if the government, our government, the Trump administration, was really happy about that landing in the arms of Microsoft? That might be a huge benefit. What they were able to do with LinkedIn, I don't think anyone thought it was going to be the sort of thing when they probably bought them close to 10 years ago. So again, I'd bet on Satya Nadella at some point to kind of come out of this and have, a whole new trajectory. So the idea of dollar cost averaging could make a lot of sense. Guy, I want to make one last point about this Deepseek. Amanda, let me drive here for a second, because I want to show you. I have Perplexity, and I have their Pro. I pay $20 a month for it. One of the things that's really cool about this is that I can choose the large language model that Perplexity uses to do my searches. Okay, so I just want to show you here. When I go right here, this is my interface. If you don't have Pro, you're not going to be able to do this. Look what comes up here. The first thing that you see is reasoning with R1. That is the Deepseek model. So because it's open source, Perplexity has already integrated it as one of the choices that you can use here, which is, so on Pro, I can go down, and I'm not using R1. I don't know what the hell is going on in there. It's a Chinese, sort of thing, but I can kind of change the models here, which I think is really cool. So if I go in here, and you can see this, you have lots of different ways to kind of change what you're using. So here's the default AI model. Claude is Anthropic. Sonar is what they're working on. GPT-4 is obviously OpenAI, and Grok is AI, that's XAI, that's the Elon Musk one. And then there's also Llama that you can choose from. So the fact that they're literally giving you the options right out of the gate to use R1, the Deepseek, I just think is really interesting, Guy.
It is. I know you love this stuff. Obviously, I'm not as much a fan. And as you were saying earlier before the show, I'm somebody that sat on an airplane last night for almost 3 hours and stared straight ahead into a blank screen. So, perplexity or any itty is not really my jam. But, your point is well taken. We have a quick question here from Peter DeBay. And this, we're going to talk about GM in a second, but throw up Uber because, Uber obviously had a huge downdraft from, I think, 90-ish down to 60 on the back of all the Waymo news that came out. 60 was a big level that we held. And in the aftermath of that, a lot of people came out and made Uber, top choice, best pick type of thing. And I'm in agreement. As a matter of fact, Uber is the U in my tube. But his question is about volatility, the implied move into next week. I don't know if you have that, Dan, real quick.
Yeah.
But let's take a look at it, because I will tell you, I'm one of these people that actually thinks Uber's I think we're going to go right back to those prior all-time highs.
Yeah, so I like it too. The stock's been really volatile around earnings. The implied move is about 8% in either direction. And just look at the decline to those recent lows in December from that huge gap higher and the breakout to all-time highs. That was the Tesla robo-taxi day.
Mm-hmm.
People walked away from that event saying, holy shit, these cars are not going to be in production anytime soon. And then what happened is the street got around the fact that, well, maybe they are going to be sooner than expected based on some of the stuff that Elon was saying after the fact. And you had that big sell-off. You had that kind of move back higher. So last night, one of the big takeaways from the Tesla report, which was not particularly good, I think you would agree with me there, right? They missed on earnings. They missed on margins. We know that the deliveries are flat. They walked away from some of that prior guidance that they were alluding to about 2025 reemergence of growth, but they started talking about robots and robo-taxis and all this stuff, which is not part of the story right now. You know what I mean? So the stock got going. So now Uber sells off. I'm with you. 8% implied move. I think this company's still doing 4 billion rides a year here, So I don't think I think that the competition is a few years away, and I don't think the stock starts discounting it for a bit longer, Guy.
I'm with you, and I don't want to get bogged down, but I will tell you, and I said it last night on Fast Money, I'll say it here for those that didn't watch. If you had told me prior to that earnings release, and I'm not a hater, I'm completely ambivalent about Tesla, but if you had said they're going to miss on EPS, they're going to miss on revenue, free cash flow is going to be a huge beat, but that's on the back of basically taking a mark on Bitcoin, I think, to the tune of about $600 or so million. And the margins would be the worst we've seen, I think, in almost 7 years, the automotive margins. I'm like, holy shit. Given the run the stock had, understanding it sold off a little bit since that recent high, it's got a $50 move to the downside. Obviously, that didn't happen. So, sometimes, knowing too much can hurt you as well. I'm surprised, but to your point, I just think he continues to tell a story that people are fascinated by. And, he pretty much said that, by the way. He said he's been promising and promising. At some point he has to deliver, but the market keeps sort of eating it up, Dan.
Yeah, I mean, listen, you and I have been talking about this for the last few years. They've been in a price war. They have issues with China and competition there. They have headwinds as it relates to the potential for EV credits to go away. I mean, high interest rates. I mean, the list goes on and on. The lack of a low-end model that competes, with some of these cheaper brands. They don't have a hybrid. That's what the Detroit automakers are kind of leaning into. And to your point, auto margins keep going lower. I mean, I think X credit was 13.5% or so. And you said it. They said, a couple years ago that it will never get down to traditional auto margins. Well, they're there. So you better believe in robotics and you better believe in autonomy and then robo-taxis. I just would take the over in anything that he has to say about that. And the stock has pulled forward a lot of enthusiasm, largely because his proximity. All right, guys, let's do a hard turn here. We started out talking about volatility post-earnings. There's a few names that maybe weren't nearly as exciting as some of the ones we just went through. Earlier in the week, GM. This is a stock that had massively outperformed Ford. You don't even want to put it in the category of Tesla. They're just apples to oranges a little bit. It's a name that you liked a lot of last year, maybe on a relative basis to Ford and some of the kind of adjustments that they were making towards their strategy as it relates to EVs and the like here. What did you take away from it? Because I think at one point it was maybe down 7-8% after its results.
Yeah, I thought, well, if you pull up a chart, I think it will speak volumes as to, you saw that huge move. I mean, if you look at what Ford and, huge move in the scope of Ford, excuse me, General Motors, this was a big move because this really is a stock that if you go longer term, you'll see really hasn't done a whole hell of a lot. So when you finally saw a move from like 40 all the way up to, I think, 65 or so, you're like, wow, this thing is getting back on its horse. Obviously, a bit of a disappointment. And I think what happened is people like, I've been burned so many times in this name. I'm not going to let it happen again. But, I look at it and I say, this sell off down to 50 or something ish is sort of interesting yet again. So we theoretically should be back at support in the form of the moving average. I think I think the story is still intact. I think the move higher scared people. And I think the fact that people have been smoked so many times trying to play from the long side has created some trepidation around the name.
Yeah, and I think the move off of that high from just a couple months ago, when you look at it from back in November, I mean, things were getting a little euphoric post-election, right? And people are talking about what are some of the regulatory implications, what are some of the tariffs that might, happen here, and that's why I think the stock gave back a bunch of that. Move higher. And I agree with you on the level. I mean, it feels a little bit precarious here. It's sitting right on that 150-day moving average. We're not even going to talk about valuation. It's not a sort of thing that's important here. But if a lot of that volume took out some of the weaker hands that we saw into the name over the last few months, that gap might be ready to be filled, excuse me, back up towards 50. And I was looking at this and, we've been using some calendars, whether they be put calendars or call calendars over the last few months, because I think it really works in this environment, especially after you have a situation where the news is out, you have a well-defined sort of tech setup here or, technical setup here. So I was looking at this, I was incorporating some of the things that you think about the fundamentals and then the potential for support right here at the 150 and that uptrend. And I was thinking about how do you play this thing with a long bias using a calendar. So what is a calendar? I am actually selling a short dated, in this case, call, and I'm buying a longer dated one. I'm looking to kind of sell that short dated call to fund that longer dated position here. So today when the stock was trading about 50.40, I was looking at the February, March 52.5 call calendar. It would cost you about 70 cents selling one of the Feb 52.5 calls at about $1, buying one of the March 52.5 calls for $1.70. Again, that's 70 cents. That is my max risk. That's about 1.5% or a little bit below that of the stock price here. So what do I want to have happen here? So the stock can go sideways, it can go lower, and go higher, and I can still make money on this trade to some degree here, because ultimately by selling that short dated out of the money call, ideally I'd like to have the stock close at 52.5 or lower. So in that instance, on February expiration, if it's 52.49, that $1 that I sold is worthless, and then it helps fund that longer dated March 52.5 call that I paid $1.70 for. The worst case scenario is you have a huge move higher or a huge move lower, and then you would lose most of that 70 cents in premium. But the better likelihood is that this stock is between 52.5 and probably 47%. There's just a high probability you have it in that range, and then you end up owning that longer dated call for possibly that gap fill, Guy.
There's so many fun things you can do. I mean, fun is an odd word for me to use, but I'll use it. This is an environment where if the market gets a little squishy here over the next couple of weeks and GM sells off, I mean, you could play a little stock market and then buy back the February 52.5 calls that you sold for $1 at some obviously lower price. So you can play it that way as well. Or you can say, you know what, probably going to go sideways for the next couple of weeks. I'm okay with that. That dollar's going to go to nothing. I'm going to take that entire premium in, and then I'm left with a March 52.5 that I can sort of play with. And you've mitigated, obviously, the cost. So what I like about this is optionality. And I actually, and not only that, because that's something you should always have, but the levels make sense as well. So again, you know what you're risking, and I think you know what your upside is. So I think it's a nice little trade here.
Yeah, let me drive for a second here of the legend because again, I'm getting pretty good at this over the last few months. I know they released it back in November, and they're adding a lot of functionality, so I think it's pretty cool. Let me just go to the options change here and just show you kind of how you would build this trade, right? So here we are. It's January 30th. I'm looking to the third Friday in February. That's February 21st. The stock again is at 50.5 here, so I'm looking at that 52.5 call. Right now, it's going to trade at a different price than what we kind of priced it up as just a little bit ago. Then I'm going to go to the March expiration, and I'm going to go to that 52.5 call, and I'm going to put in order to buy that. So you see that basically it cost you 73 cents. When we priced it up, it was about 70. And that's kind of how I'm using the legend here. And then I can kind of go right back towards the chart and kind of help me think about a little bit about these levels. So this is a few month chart here. Look at where it stopped, right, on that earnings day, just above that 150. Then the next day, it traded sideways to lower, stopped right above that 150. We're a little higher here. So the idea of playing for a little bit of a gap fill between now and Feb expiration, and then looking to your point about a little optionality, I might turn that into a call spread if that February expires. Worthless. Tomorrow, Guy, we are doing a market call at 10 a.m., a very special market call. We're going to update an Oracle put calendar. Okay. So this is one that we put on a couple of weeks ago, playing for a move lower. And this is a great example of how we probably got a little too cute on this one. You and I both thought the stock here, I'm just going to pull that up for one more second here, back on that Stargate announcement that we had early last week. And then look at this chart right here. This is one of the weirder sort of bar charts. What you say over like a few week period. So you had that big strong move, you had that gap, you had that consolidation, and you had the gap lower, and now today you have a move higher. So this is one that's been very volatile. A calendar works well in this sort of environment, but we're going to update that because the short leg expires on tomorrow's close, Guy.
Yeah, we will, without question. Looking forward to doing that. Real quick, I don't want to bury the lead in terms of what's going on tonight, but we got to take a look at Apple. Obviously, that 220 level that we had talked about for a while, that held like a boss, as they say. And I think to a certain extent, the weakness that we saw in some of these semi names actually probably worked to the benefit of Apple, along with the fact that it traded down to those prior lows. So with all that said, you have a stock that's getting back on its horse. I know you had Gene Munster on OK Computer. I know he's positive about Apple into this print. I've heard him say it a number of different times. By the way, he's the same Gene Munster back in June when it was trading 192 that thought that event, that June 10th event, was sort of I don't know what he used, but one of the bigger announcements in the history of the company. He thought it was a stock moving event, and he was right. So here we are, Apple tonight. I'm hard pressed to imagine what they're going to say to get people excited, other than the potential for services revenue to continue to grow vis-a-vis overall revenue, which will somewhat justify an extended valuation.
Yeah, I think there's a couple things that I think are worth noting. So there was 2 downgrades on the street over the last week, right? So the stock really had a tough time over the last month. It got to that 220 level. You targeted that last week, Guy. It was kind of the moving average. There's also that kind of breakout level. You had this big move this week. We hit it a couple times. Why? This is a company that, Deepseek should not be a huge headwind to them. They haven't spent tens or $100 billion in CapEx trying to build their own large language models. They were going to license OpenAI's. That being said, the OpenAI integration, Apple Intelligence, was supposed to kind of lead this huge upgrade super cycle. Not happening, or it hasn't happened yet here. And then in China, a big part of that Apple Intelligence excitement was that there's 300 million iPhones in China that need to be upgraded. Well, Apple Intelligence was never going to make it by the Great Firewall. Now you have a situation where if you were a local provider of, or Huawei or Oppo over in China who makes low-end smartphones, but you can have DeepSeek on there and WeChat Super App, maybe a lot of those folks just don't upgrade their iPhones and they look locally. So to me, I just think the Apple thing is going to be an interesting setup. Amanda, let me go back to the legend here for a second, because I just think it's a good reminder of showing everyone. Here's that chart you just saw here. Let's go to the options chain. So if the stock is reporting tonight after the close, and if you were looking to kind of price
GM,
up,
you got to throw up Apple real quick.
Oh, yeah. Thank you, Guy.
Got to pay attention. Cheapest thing you can do.
Matter of fact. So here we are. I'm on the Apple, options chain. I'm looking at that's March right there. Let's just kind of go back to the Jan 31 weekly. If I'm looking to kind of price up what the implied move is, I have the stock trading at 238.34. I go to the middle of this options chain. If I was looking to make a near the money sort of, kind of defined risk bet in the print, if I'm bullish and I'm looking at the call, well, here are that 240 call is trading, at about 4.25, 430 or something like that. If I was looking to play to the downside, I might look at that 237.5. That's about 460. You put that together, you look at the at the money straddle or the strangle, and you get yourself about a little more, that 4.25% move or so. That's how we kind of figure out the implied move. You take the at the money call, the at the money put, you add it together, you divide by the strike, and that is the sort of movement you would need if you bought the at the money straddle by tomorrow's close. On average, Apple doesn't move a whole heck of a lot on earnings, which, guy, is kind of surprising because here's a company whose main product, iPhones, has not been growing. Their earnings and sales growth, single digits. It trades at a big multiple. So I'm surprised it's not higher, but by the history shows it doesn't move a whole heck of a lot.
Yeah, no, we've seen that before without question. And we're always sort of find ourselves scratching our head. But, a lot of it is very specific to Apple. And again, we talk about it, the amount of passive money that flows in. But with that said, I think you can glean a lot in terms of what's going on, not only on the tech front, but on terms of the consumer front as well. So obviously we will talk about Apple in the aftermath tomorrow. A lot of people asking about UPS. Throw up a UPS chart, Dan, because, a very well-defined downtrend, as I've told you now for quite some time. That downtrend clearly has not been broken, especially when you look at today. I mean, if you really want to play a little stock market here, and again, a stock that's been cut in half, you go back to 2020, and that what was going on then. This stock, I think, was a $90 stock. Do we round trip that entire move? I don't know. But it certainly, there's been no catalyst to buy the stock. The only thing that I can tell you, and you have it in front of you, my sense it's going to be a pretty big volume day in UPS. This is a stock that typically trades about 4.5 million shares a day. If I had to guess, we've probably done 12 already today, Dan. So maybe you get some flush in that. Maybe it's a bit of capitulation, but I don't have any compelling reason here to sort of go flying into the stock.
Yeah, and you mentioned 2020, and look what, maybe Amanda can pull it back out to 2019. So this is a company that when the world shut down, which it did in Q1 of 2020, you see what happened. The stock kind of went a good bit lower because there was no freight. There was no, And then all of a sudden, we got to a point where, holy shit, everyone was buying everything online, and these carriers better get their act together and get going. And so Amazon was a huge beneficiary of that, UPS, FedEx. But that ramp tells you that in the aftermath, right, when bricks and mortar retail opened back up and a whole host of other things, the story has been kind of lights out. And I know that this is a name that you take a look at, but today the headline is, and in the earnings, is that the Amazon business, the local, it's just getting cut in half. So Amazon's been working on their own logistics and their own last mile sort of solution. So I don't know how you turn this thing around, guy.
Well, Doug Cass just texted me. They changed their symbol from UPS to OOPS, which is clever. And something that Carter Worth talks about all the time. All gaps at some point get filled, and you got to go back again almost 4 years or so, and you can look at that gap on the upside that we saw in the middle of 2020. If you were to pull your cursor all the way over, you see that gap that was created. I don't know exactly what it was. There you go. It was probably some earnings release, but 4 years later, finally that gap is filled. So just keep that in mind when you do see gaps in charts. Sometimes it takes some time, but it winds up happening. I want to throw up the poll again real quick because we are sincerely interested in what you have to say about this. Again, we're not doing anything tomorrow. We're just talking about it internally. If we should move this show market call from 1 p.m. Eastern to 11 a.m. Eastern. So throw a vote in because we're really curious as to what you think. And we're not going to do anything drastic. So, we will give you fair warning, as Van Halen said.
Yeah, one of the thoughts there is that if we're going to be very trade oriented here, we just kind of give folks a little more time to kind of do some of their own work on some of the stories that we're talking about. And this audience builds a lot over the course of the day. So that's one of the things that we just want to give people some time possibly. So we'd love to hear what you say. One last thing, Guy, before we get out of here, I just wanted to kind of tack this on to the end of that kind of UPS, Amazon sort of conversation. I wonder if this is kind of, Amazon doing their best to kind of weaken, someone that they've relied on a little bit. This has $119 billion enterprise value.
I know what you're going to say. I said it 6 years ago that Amazon should buy UPS. They could have done it probably cheaper back then, but obviously it's gotten a lot cheaper. I don't think that's preposterous. I don't know how that. Well, let's put it this way: in this new administration, that actually might fly. So it's not preposterous.
Well, that's exactly where I was going. The difference now is that you have Jeff Bezos has cozied up to the new administration. You also have a situation where UPS, this is a great American company, right? And it's not too different than Boeing, or, we've seen this in a bunch of other names. And you would think that this kind of America first, rah, rah, all this sort of stuff, you'd be looking to kind of help companies like this, and especially in an easier regulatory environment. You could make the easy argument that this would be very bad for pricing for consumers, that if you vertically integrated, Amazon and their distribution with a company like this, because maybe they get rid of same day shipping and this, that, whatever, or you have to pay for Prime 2-3 times what you're already paying for right now. So there's a lot of ways to think about it. But if you're ever going to try to get a deal like this done, it would be under this administration.
Agreed. I'll say this. I don't know what is out there that requires me to have same day. There's nothing that I covet enough to say, holy shit, I need this in the next 7 minutes. But that's me.
But Guy,
I'm a different animal.
It's not like consumers are begging for it. The company said if you pay $100 or you pay $150, you're going to get same day shipping. They know that if you pay for Prime, you basically, I think on average over the course of a year, you'll buy 2x what like the non-Prime.
No, listen, I get it.
It's fascinating.
I am not of this world. I'm really not.
Matter of fact.
I mean, you saw it. I mean, people think I'm making this stuff up. I mean, actually, last night on the planes, they had those little screens in front of you that you can watch whatever you want. On the way out, there were none, by the way. But mine was black the whole time. I just sort of stared aimlessly ahead.
Yeah, you did. All right.
I mean, I know people think that's sort of weird. Maybe, I don't know. Maybe
we had a good week. It's not over yet. Tomorrow morning, 10 a.m., market call. We're going to be breaking down what we heard and saw out of Apple. We'll probably put a little bow on what was probably one of the more exciting weeks in technology that I can remember in a long time. I'm really interested to hear what Apple has to say about, Apple Intelligence and what it meant for their services, what it meant for upgrades. I'm actually not particularly optimistic. Guy, if this stock was trading 220, 219, and they issued what I think is going to be mediocre results in guidance, I'd say the stock is probably not going to be down too much or up too much. But the fact that the stock's gone from 220 to, just in the last kind of
240
to 240, they really are going to have to beat and raise. And I just don't see the ability for them to raise guidance in this environment.
We're going to know in 4 hours-ish. Yep. Please vote in the poll. Thanks for joining us. Thanks for indulging us this week as we were off-site. Great job by Amanda, Jacob, Timmy, Bill, the whole team. And we'll be back tomorrow. Market call, 10 a.m. So see you then, folks.
Yeah.